here we are again with another episode of The High Ground, powered by Premier Companies. And Sal, how are you?
Good, great.
Good.
Anxious to hear this USDA report today.
Yeah, we got Aaron Bledsoe back with our grain division and going to break down the USDA report. We're going to talk about volatility. We're just going to talk about a lot of stuff today, Aaron, and you're going to do most of the talking. So
Perfect.
Your wife told me that's probably not going to be an issue.
Yeah, she's right. I deny it every single day, but let's be honest, that's not right to lie. So here we are.
She'll tell me the truth.
Especially on Valentine's Day.
There you go.
Love
Oh
you.
my gosh, it is.
It is Valentine's Day.
Jeez.
Right, and we're not supposed to act surprised by that.
But as far as USDA report goes, February notoriously has not been a big market mover, and this one shaped up to be exactly that. Not much of anything. Corn, long story short, the estimates for the ending stocks was somewhere around 1.498 billion bushels. The USDA didn't change it at all, so we're still at 1.54, which the estimate wasn't far off from what the USDA report was. There was a little bit of a move. You know, the ranges were somewhere between 1.2 to 1.6 billion bushel carryout. That's not a huge range, but you can see where some people had it penciled in at 1.2. I mean, if we get down to 1.2, then that would have been a huge market changer. But the USDA usually doesn't make big trims like that unless it's just overtly warranted to make that big change. As perspective goes, we were at 1.2 last year. So we've got about, right now on paper, about 300 million more bushels than what we did at this time last year. So, beans are a little bit more interesting. You know, last time I came on here, I said I really wasn't bullish beans. Well, a lot of things have changed. They still make me nervous a little bit, but the USDA report definitely helped out a little bit. But the big helping factor here is the South America crop is getting smaller than getting bigger. They've made changes versus 3-4 weeks ago when the last time I was here. The market's kind of changed attitudes here. CONAB, for instance, that's South America's or Brazil's version of kind of USDA numbers. USDA has Brazil crop at 134 million metric tons. Well, CONAB has them down at 125.5. So there's a big variance there. And all that tells me is that USDA eventually, even if CONAB is a little low and they need to come up, somewhere they got to meet in the middle. So eventually you'll see the USDA number come down on the Brazilian production. But as far as U.S.-based, they came in at 325 million ending stocks. That's dropping 25 million bushels off of the balance sheet from the January report. That was all due to the crushing number. It went up 25 million. And if we need to stop, just let me know, because this is a lot of numbers flying through. But like I said, these weren't big market changer type numbers. Estimates were off about 17 million. They were somewhere in that range. Well, they're at 308. But the range was the big one on this one. The range for the average trade estimates were going 182 to 364. So, you know, corn, you're looking at that range anytime you're talking about like 40 million, 50 million bushels off of where the trade estimate is. You know, you can make big changes there. It takes a lot of bushels to make a big change in that. Beans, on the other hand, that's a huge range. I mean, you're talking 180 million bushel difference between the top side and the bottom side of that range. If that number ends up getting down to where it starts with a 1, we're going to see historic level prices. Last year, we were at 256. Those are really strong numbers, but like I said, overall USDA came in pretty close to what we did last month in January.
I got a question. So explain the range.
Mm-hmm.
Explain the range you're talking about, and then Aaron, tell us a little bit what's causing that. Why is that range there?
So that range is where like you get all your fund money, and also a lot of your speculators out there. That's where they're coming in with this range. So you'll look at it and you'll see a spec that's bullish bean. Well, the bean market. they're probably going to come in and say their estimate or how they're trading this on how they're buying into this market. Because remember, if you're a bull, you're buying into the market. So you're buying those futures, holding them, thinking that it's going to go up and you can sell those futures later on, make some cash. The bullish ones, they're going to buy into this thing and they're running off of estimates from, StoneX or Cargill or ADMs out there. Anybody who has their own analytical tool out there or talking to any farmer, they're going off of those numbers. So that's where kind of this range comes from is the 182 is somebody that's saying, nope, eventually China's coming in to buy a bunch of our beans. South America crop's getting smaller. USDA should have made this change. They're just balking at it. They're not doing it right now. On the high end of it is we're probably going to cut exports. China's not going to buy any more of ours. The South America crop's going to get bigger than what it is right now. So that's really what makes up the range is that you've got the fund money, the speculator money, and also, as elevators, we hedge a position. Well, we hedge opposite of what a normal spec would be. As I buy grain, I'm selling futures, and as I'm selling grain, I'm buying futures, which is complete opposite of what most people think. A spec, though, or anybody that's out there playing in the market with options or anything, they are buying the market when they think this thing's going to go up, and they're selling the market when they think this thing's going to go down. Does that answer your question?
It does, and with that much range, I guess that just means that that predicts a lot of volatility, right?
Oh yeah, yep.
I mean so we know we're going to have that. We just don't know which way right now.
Exactly. Yeah, and with the ranges being a little smaller on corn, it seems like the market's more condensed, and they're kind of thinking the same range of stuff. Versus the beans with a big range like that, you've kind of got extremes on both ends of this thing here, and that's what makes up for like last Thursday, right after the report, you had a 40-50 cent swing in a matter of an hour and a half. On the overnight it was up, left the office at 11 to go to something, and then by noon we went from 40 up to down to 7, 10 in an hour. It looked
like there was a swing from like at some point in time opening at like 36 up, closing at 20 and a half down.
Yeah.
That's volatile. Those are monthly changes, not hourly.
Yep. You want to talk about an emotional coaster ride? That's where we're at, and that's where the volatility is coming from. Is you've got people that have just kind of dug into the sand on one side or the other of this thing, and it is what it is. Until we finally get all the numbers rolled out, I think bean-wise, you really won't know much until we get the South America crop actually harvest and you let the dust settle.
Is there any indication that crop's getting better? No.
I saw a number this morning. I want to say they were like 20-some% done harvesting, and the beans that they're getting right now, they look good. But at the same token, Friday, that's when CONAB came out and said, "Yeah, we're only going to probably be around 125.5 million metric tons," and that's significantly lower. But at some point, I mean, is the market already pricing that into itself? Or are we still waiting for the USDA to make that number and then make that next leg up in the market?
So all we're waiting on in South America is harvest to get done. There are no weather events that's going to change this one way or the other. This card laid is card played.
Pretty much at this point. I mean, the big thing would be if they're getting some rain, which is slowing harvest down. And we know what beans do when we slow harvest down. Quality goes down. And then you start having bean or pods start popping up, so yield starts dropping a little bit. Okay. That could be a big factor in it. Really, the bean market is just it's purely based off of South America right now. I mean, we're just waiting to see what that crop really, truly, honestly looks like. And we may not know for a couple months. Hence the volatility that we keep talking about.
Okay. What else in the report?
I think so. A couple things. Take a little bit of a tangent here. One, Josh Linville, when he came in and talked to Ryan and Jeff, Jarrett, I want to say that was probably one of the best conversations I've heard on the fertilizer market. And he made me kind of go back. If someone's not watched that YouTube clip or listen to that podcast, I would highly advise them to go back, because he got back to the supply and demand. He got back to the basics. Now, he was talking about fertilizer. I know everybody's got a lot of questions about fertilizer and what prices are going to do there. But you can take those same fundamentals and apply them to the bean and corn market. And that's kind of what I got at this morning before I showed up. Was I was looking at how do we compare to this time last year? I mean, we know the crop, like we talked last time, record crop. I mean, it felt great to harvest the bushels that we did, and we're talking about prices that are phenomenal for a record crop. So it sets itself up to make quite a bit of money this year, especially with this crop that we're selling right this second, the old crop bushels, planted with bushels that didn't cost as much to plant. So this time last year, and I'll ask you guys this, I'll give you a little bit of a lead here. Right now, we're trading somewhere in the 1560s to 1620s. Again, that's a 60-cent range, but this thing changes real quick. For beans, on 2/16 of last year, where do you think that cash market was? The nearby Chicago Board of Trade contract was.
I'll take the lower.
I'll give you a hint. It's definitely lower, but where in the lower range do you think?
I don't know. I'd say a couple dollars, a dollar.
I'd say $2.
$13.85.
Wow.
$13.85 is where we were. So I mean, you're talking $1.50, $2 easy. $3 if we start clipping up in that $16.50, $16.60 range. So the big one, I mean, that one was big, but I feel like this year we have a little bit. We were paying more attention to the South America crop this year than we were last year at this point. South America started trimming their numbers back from a record crop earlier in the process this year than they did last year. So we're a little ahead of schedule or a little ahead of the game for the cash market. But the fall, so this time last year, if you wanted to book a fall contract, so deliver this past November 21st, so you're looking off the Nov. Well, on 2/16, that November contract closed at 11.86. Right now, I've got the market right here. We're at 14.37.
So sell.
Yeah.
I got my pen running here.
Yeah.
You can hear the scratching of my scratch.
Yeah. The crazy part was on June 8th, we hit the high for the November 21st contract, and that was at 14.66. And we're already right there knocking on that door. And we've not hit that quite yet. I don't think I'd have to go back and look. I know that I haven't had any targets above that point for them to hit. So 14.25 was roughly where it's the highest I got. So we actually got there. At one point last week, Thursday morning, we got to 14.66.
And so going back to these targets that you talked about on the last podcast, how important that is.
Yep.
Because you just told us we had a 26 up and a 29 down last week.
Yeah.
And so that just tells you how important these targets are, where you set them.
Yep.
It costs nothing just to call in and just say, hey, what's a good number that I should plug in there so I can just forget about it?
Yep. Yeah, that's exactly right. And it varies on what kind of operation you have too, and where you are in your selling at this point. I mean, if you're already pushing 20% of what you know you have to deliver in the fall, maybe you start to get a little bit more aggressive and see if this thing comes back. Or if you started a little early, we saw some guys book some beans back in December for this coming fall. So, and those were somewhere around in the 12s. Well, if you're going to try to pull that average up, then maybe we start talking a little higher targets than where it is right now. But that's a great point in that just that one day, if you had a 14.25 target, it would have hit, and you wouldn't have had to think about it, and you didn't have to live with the remorse of by 1 o'clock we were down 30, close to 30, versus being up 36. I mean, and that's where this roller coaster ride comes in, is that it's a lot easier to sell bushels as it's going up, and you always think you lost money when it keeps going up, but you didn't. You lost an opportunity. But if that decision was made and that decision made you money, then it was a good decision at the time. The problem is when we start getting on this other side of this mountaintop and we start trimming and we start losing 5 cents here, 10 cents there, you bury your head in the sand, and then in about a week and a half, you've lost $1.50. And then some people, it's really hard to get out of the mind frame of this market has to come up because it's already been there. The market doesn't have to do anything. The market it's not emotional. It's driven all off of supply and demand and a little bit of fund money. I mean, don't get me wrong, that plays into it. But the big outstanding thing is supply and demand. So there's no emotions tied to it at all. And that's why I really think you got to be careful in volatile markets like this, especially with beans, as big of a swing as we can make. We got to start doing targets, and we got to start really sharpening our pencils and figuring out what kind of game plan we want to come up with to protect yourself and to take the emotions out of it.
And which setting a target would. Right?
Oh, yeah.
I mean, that takes the emotion out, and you don't all of us, would you say it's kind of hard to sell when it's going up? It's just you feel like.
I would say to look back in retrospect when it's going up, that's the hard part.
Yeah.
Selling when the market looks green, that feels good until the next day it's up 30. And then you look and you're like, man, I lost 30 cents. No, you didn't. You lost the opportunity at 30 cents because you sold 30 cents ago. But what you made the decision yesterday, that made you money. That was a good decision.
Still feels good. You say you hit my target, right?
Exactly, yeah.
Well, all of this still goes back to the cost of production and those. What is that number? How do you pick that number? And, as I looked last week, and I pulled these numbers last week, these weren't for new crop. These were just like May numbers. But so soybeans went up on Monday, 28 1/4. Tuesday they were down 12 3/4. Wednesday they were up 25 3/4. Thursday they were down 20 1/2, and Friday they were up 7 3/4. And the net of that was less than 2 cents from Monday to Friday. It looks terribly volatile, but it didn't turn out to be. But the same can be said for if that becomes down, 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 a little up, and then down, and you get to the end of the week and you're looking at 12 cents, 15 cents a quarter, and you begin to think, that's probably enough of a pattern for me. And setting those targets is helpful, but, last week with all that volatility, corn ended up 16 cents and beans ended up a little less than 2 with all of that movement. It's easy to get caught up in that.
Exactly.
And get so emotional and say, well, I'm setting out. It was down 20 and it's up 30 and I'm setting out knowing. Ultimately, it comes back down to cost of production. And here's something I can live with. And that's new numbers this year. That's a different number than last year just due to input costs.
Oh, yeah. Yeah.
We used to have that target of if it was $4 corn and $12 beans, things would be better. Well, that's not necessarily true right now. But you've got 6 and 14 or whatever. I mean, it feels better even with input costs.
Oh, yeah. Yeah, I mean, there's no reason to be doom and gloom in this market at all. There's watch outs. And with a volatile market, again, it goes back to your mental state. That's where we got to be careful, is that because we start projecting our own feelings and our own emotions onto this market, and the market doesn't care. It'll make you money, and it'll take your money just as quick as it does either one. And the beans feel like that right now. I mean, it feels, like you said, that huge swing throughout the entire week ended up only being 2 cents.
Yeah, I think Josh said that. He said there comes a point where your biggest problem with markets are 6 inches above your shoulders, which is true. It just gets in your head and it becomes an emotion. Move on. So I think you've described that very well where we are today, because that looked turbulent for 2 cents.
Yeah, yeah. And corn, last time I was on, I said I liked corn. I like the story it's got. High inputs. There's the narrative that eventually it has to fight to buy acres away from beans. And it makes sense. But when you look at the numbers, it kind of looks a little different too at the same time. I mean, no 2 years are exactly the same. It's just not. And we've got black swan events going on right now that we cannot predict, or we know how this market's going to react. Russia and Ukraine, the Black Sea, we have no idea what that's going to play in the corn market. I mean, Ukraine's a big player in corn exports. And that Black Sea is a big region for wheat with Russia and Ukraine. and wheat is a corn supplement. So that's a big black swan event that could drive this thing one way or the other, and we have no idea, and you're just taking a bet on that one. South America crop, if the bean harvest goes well, then you might get those second crop corn acres or that safrinha corn, which is their largest export part of their corn market. It'll get in the ground, and if they have favorable weather, they're going to talk a big crop. But where we are right now versus last year, right now, the March contract's trading somewhere around that 650 mark. This time last year, we were at 552, $1 difference. And that's big. I mean, proportion-wise, beans can run. That's why beans limits are $1.50 in the expanded limits, and corn's 40 cents instead of 25 to take care of these volatile markets. The D's 21 this time last year was 458. We're at 590 right now. And I know
150 bushel the acre, that's big money.
Yeah, and I know that the input costs are higher, but at the same time, if you know you're going to plant corn and you've got some of those inputs locked in, I would be protecting yourself. Because it doesn't take long and we could lose a little bit, and all of a sudden it may still be a good decision, but it may be a good decision that just limited your loss.
Yeah, and if you're listening, it's got some pretty serious faces around the podcast table right now. So I think in going back, it's just a matter of communicating with your grain marketer and knowing what your goals are, knowing what your input costs are. At this point, we've got most of those locked in. A lot of folks have, and knowing what margin you're comfortable with.
Yep.
And it's a good time to lock in a margin.
Oh yeah. Yep. And there's still, we've spent a lot of time talking about new crop. New crop is something that I think you got to be careful with. Have a really thought out plan on this. Planning and be decisive. If you're not decisive and you're kind of ho-hum on stuff, you'll get caught. And sometimes it'll work in your favor. Other times it's going to take it from you. Old crop bushel wise, man, this market feels great.
Yeah, these bins ought to be empty.
Yeah. And so to those of you that still have beans out there, or quite a bit of beans out there, you got a pretty good gut feel on this market, because we're seeing a lot of beans move, hearing some beans emptying bins out right now, which is typical. You get to that April, May, our customers have other things to do, like plant the crop that they're going to sell for this fall versus hauling stuff out. So we've seen the markets and the pipeline really get hit in the last couple of weeks, last month or so. So if you got beans, you're sitting in a really good spot. I hate telling people not to sell $15-something beans. So if you've got a little bit, that's an appetite. That really comes down to your appetite for risk. If you've sold 90% of your old crop beans, made a lot of good money, and you want to gamble with the last 10%, that's your prerogative. I can't say that I wouldn't either if I had a little bit. I don't like a whole lot of risk. If I can make money and make my margins, I would get rid of it. Corn,
keep a few truckloads to play with.
That's exactly right.
And see if you can get that feeling of selling at the high, but don't you didn't raise those beans to keep them forever, right?
That's exactly right. And the market is not paying you to carry beans. So the market wants you to sell your beans now. Basis is telling you, I want your beans and I want them now. That March, April, May timeframe looks really good for bean deliveries. I would, target wise, I'd probably start with a 16, really. Some of the rivers will probably give you that, pretty close to it. I'd be, if you really want to gamble some, shoot for 1650. I don't think it's out of the question at some point. Corn, old crop bushels, again, it looks phenomenal. I would be a little bit more proactive on getting rid of the corn, just because we're still talking about a carry-out projection right now of 1.5 billion bushels. The market's usually pretty comfortable with that. When you start getting down to the 1.3, 1.2, it gets nervous. But 1.5 right now, if everything stays the same right this second, which if it does, oh my gosh, that's amazing. But if not, who knows which way this thing's going to go.
Yeah, and you mentioned black swans earlier, and it's there's a I mean, you don't have to turn on the news for very long to see the types of global issues that are out there.
Yeah.
And not sure what that would do.
Yeah. Yeah. I mean, I guess to get back to the basics, I had to look at our own operation. White Commercial, the people that we hedge through, they've got some really good folks on staff, and they help elevators and grain merchandisers become better for their customers. I mean, that's their end goal, is to help me help the customer, because at the end of the day, that's all we're here to do, is to help the grower, the farmer. And you got to go back. You know, I keep talking about emotions, but a good decision is one that's well thought out of. But that decision is worthless unless you're decisive and you pull the trigger. And that's where the targets come in. That's where talking to Jason and I, or any of your trusted advisors, especially your account managers, figuring up your inputs, figuring up your costs, figuring up what it's really going to come down to, and then figure out how much money you want to pay yourself. I think sometimes guys may forget that, to throw that into your cost per acre. You got to figure up an income in that. If not, you're always just break even. And I don't think anybody wants to do that. I think guys want to be able to pay themselves or pay their help a little bit more. So don't forget to throw that into that number. Right now, old crop wise, I feel like everybody can make money at these prices. New crop, be careful. There's money to be made. Beans make you a lot of money right now, which is what makes me nervous on this market a little bit, is that we may not see a big acre shift, but at some point, high prices cure high prices and low prices cure low prices. So,
yep.
So we're talking about a lot of black swan events and global news. Locally, regardless of high input prices, if we have a good late March, early April, our customers are going to slam corn in the ground as hard and fast as they can go. This will be a good corn planting year. So what else locally should we be looking at? I mean, we can talk about Ukraine, we can talk about China and all of those things, but locally, other things that affect us.
Yeah, so locally, I'd be looking at your pipeline and what the pipeline is telling you. And by pipeline, I mean your end users, your elevators. What's the basis telling you? And right now, locally, we had a record crop, and we know we had a record crop, and these prices incentivize selling that crop, especially this time of year. You know, new tax year, you can start collecting that cash. You're starting to put it towards this fall's crop that you're getting ready to plant. The pipeline right now is telling us it's full, and we're seeing basis levels drop off on the nearby bids. The deferred bids are still strong, but locally, and I haven't talked to Jason, but I think you could probably call him, and he's going to say roughly the same thing. Basis is a little weak. So your local end users, elevators, the pipeline's backed up. We're full. We're struggling to get it out. Trucking's a hard thing. Lines are long no matter where you go right now. Unfortunately, some places are breaking down. I mean, it seems like anything that can go wrong this year on not being able to take bushels, it's going wrong locally. Some guys are still crushing phenomenally, and they're eating right through the corn. But we had a record crop, more than what we know typically what to do with, and the pipeline is still trying to figure out how to use all that. And we're seeing basis suffer as a...
Yeah, it's just plugged up.
Yeah, it's just plugged up. I mean, there's no way around it. Beans, it seems like beans have a little bit more space, which is about typical. I mean, January is a huge month for beans. It's a high dollar. That's how you get your cash, is what it feels like. Corn, on the other hand, just the sheer amount of bushels and what it takes to move it, that's when it really starts plugging the pipeline.
Well, tell you what, can we transfer over into facility updates and just kind of talk about the what's going on locally? I mean,
oh yeah,
we have a lot of construction going on, a lot of improvements. You talked about the lines. We're trying to get faster unloading times, and tell us a little bit about that.
Yeah, so I'm really excited. At Lagodi, the grain facility, right now we're starting to get into the project. We're trying to get concrete poured.
What's the project?
The project is a 386,000 bushel bin for storage. We're going to put in a 20 to 25,000 wet bin, and we're going to have a dryer finally at the Lagodi grain facility. So we'll be able to move things through. We already have 2 pits. You know, we had already made a pretty sizable investment in the infrastructure to get to 2 pits corn and beans, so you don't have to interchange. You're not waiting on a guy with a load of, or two guys with loads of beans to get out of your way to dump your corn. We can get you in and out real quickly. So that's pretty exciting. I feel like we should be able to better serve our customer base over there around the Lagodi area and the western region.
Great.
Mm-hmm.
Good deal.
Yeah, we just completed a grain study, and so we'll be continuing to look at opportunities for growth and better ways to serve our local customers as well. So that's a pretty good stopping place, I think, for this. And this USDA report monthly, this seems to be well received by listeners. So we appreciate the effort that you put forth in breaking that down for us, regardless of whether or not these look like they're big newsmakers. There's a lot of information we can glean from these, and especially now with we're staring down the opportunity to sell these kind of numbers on old crop and new crop both. It's worth the conversation.
Yeah, I appreciate you guys letting me come on here and talk. March is going to be a big month. We got a normal WASD or USDA report mid-month, and then at the end of the month is the prospective planning report. So that'll be definitely something to watch with everyone's thoughts of corn acres going down. It'll be interesting to see what that first number comes out at.
We'll have you back. That's
Absolutely.
For sure.
Absolutely. Thanks, Aaron. And that concludes another episode of the High Ground, powered by Premier Companies. And shout out to all of our listeners who might be viewing us on YouTube. We want to make everyone aware that that's not safe as you're driving down the road. So we want to make you aware that we are available on Spotify, Amazon Music, Apple Podcasts, Google Podcasts, and Facebook as well. So if you like to watch the podcast as you listen to them, we're on YouTube. But otherwise, if you just want to listen to us, we're available on multiple platforms. So thanks, everyone, for listening.